Everybody, and thanks for joining our reading club. Something slightly different today. We usually come with a manuscript, but we've been thinking a lot in RiskWi around how do we get hands-on in discussing decision making. So timely, bit of something a little different here. We've got Amir, Nicholas, and Mike here to talk us through Risky Business, which is a program that mimics decision making under uncertainty. It has actually been developed over 2, maybe 3 decades as well. A lot of history behind this, but also something that we're trying to see if there's an interest in how it might be applicable to roll out in RiskWi. If groups find an interest or a home to do something like this as well. So with that, I'll hand over first to Amir and Nicholas to take us through Risky Business.
Thank you. Thanks for inviting us over today, and I'm pleased to be with you. This is a farm management tool that we've developed over years, and it can be used for a variety of purposes, and it requires no skills in being able to do anything with computers or with accounting or with spreadsheets or anything like that. So no economics knowledge is required. It teaches you things as you go along, and Nicholas will show you examples of it. Just trying to see. Okay, better do it over there. Bear with me while I try and find the cursor to move the screen on. There we are. So it's a hands-on workshop so that you can look at risk from a whole farm perspective, but it also lets you see risk from individual paddocks perspective, and each paddock or each of the fields, they're large fields. You have 9 of them in this case. You can have fewer or more in the new version, fewer or more of these fields, and you can allocate land to these to various crops. So we call them enterprises. It can be sheep, it can be wheat, barley, canola, lupins, field peas. Sometimes in some places you might want to plant trees. We allow that to happen. And it lets you then test various strategies under climatic and market variations and production uncertainty, just like real world farmers experience. And we'll get into that in a minute, as we'll go a bit deeper about what do we mean by climate variability and uncertainty. It's designed to be participated in by grain growers, mixed farmers, advisors, agribusiness professionals, and we've also run it for university students in undergraduate courses. They love it in the agribusiness courses. So it's built on the understanding of the current operating expenses of farms similar to this farm. This is a 9,000 hectare farm, and we've obtained this data from several farm advisors, so it's contemporaneous data. It's got actual historical climate and market data, so it makes actual calls, API calls, to get the climate data and market data, and then it has crop growth models like APSIM and French and Schultz that have been modified for water logging and salinity and acidity and all of those things. So it gives a very realistic yield assumption or yield projection on the different nitrogen levels and so on. And we've also consulted subject matter experts, and they've described for us the relationship between crop nutrition and crop protection. So we've got the right functional forms in there, and for how crops respond to nitrogen and to crop protection, like fungicides and things. And it compresses many years of farming decisions into a single session of workshop, and so you can test drive maybe 3, 5, 10 years, whatever the time allows in that workshop. People can choose how long they want to run the workshop. And it has flexibility in its depth as well as in its breadth of years. So that, you can go really, really deep and investigate individual paddocks and how you might manage them at every growth stage of the crop, or you can sprint along and manage, have a very light management level and just set things off and make them run so you can see the consequences very quickly. It's certainly not a lecture, but people like Nicholas and I or others in this room might Mike might be there will be there to hold the hands of those people that are actively engaged in running the game for themselves. So it's a realistic West Australian broadacre farm. I've told you about the 9,000 hectares, and it's got 9 land management units, so blocks that you're managing. It's got some low-lying areas that are prone to waterlogging and dryland salinity. You can ignore that and just get on with normal farming, but you will lose a little bit of land if you do nothing about the salinity rising. At the bottom of the bottom right-hand corner paddock, the spring paddock, and the common starting point is there for everybody. So that means that every participant starts with the same farm, same weather, same markets, and they go through time experiencing the same things, except that their management decisions will be almost always different. And so that's what will set them apart in terms of who makes more money, or who manages salinity better, or who grows more sheep and who grows less sheep, and so on and so forth. It depends on what they want to allocate. So we've got the enterprise mix most of you know about. They can adjust their land to wheat, barley and canola. And when they do, it then gives them the yield according to the season. Initially, it gives it according to forecasted season, and then or historical statistics of the season, and then it gives it according to the final finishing rains. And it also gives you news feed of, about your climate, about your markets, and it mimics the uncertainty of real seasons. And it has adaptive management, so that if you choose to, you can see, like, if I just get my red pointer, if you choose you highlight the paddock by clicking on the tile or the field, you can choose, I want to grow canola, and you can see the kind of money you'll make, the kind of expenses you'll have, the yield you will get, and then that yield is subject to the amount of nitrogen you apply, 130. And this is a medium rainfall zone, sort of Kittanning type place in WA. And then it also shows you the consequences of how much nitrogen you could apply if you wanted to, and what will happen to the shape of the growth curve for you. And on the left-hand axis, you see the yield of the crop according to the amount of nitrogen applied, and then you see the gross margins, and then you also see the emissions. So the orange line is your money, gross margin, the green line is your yield, and the purple line is your emissions. The more nitrogen you apply, the more greenhouse gas emissions you get. And every season, this graph will look different because of the way the season pans out. It also monitors how the soil pH and all of that is going, and it will take money away, or it will take yield away if the soil pH drops too far. And if you grow trees to accumulate sequester carbon, then it will do that too.
Will it do rotation? So if you plant a legume,
yes. So if you plant a lupin crop like I have done here, or a pasture, next year you'll get 50, 60, 70, depending on the yield of this crop, added to your wheat crop of nitrogen, and then you can choose to add top-up nitrogen. So it tells you all of that in these sliders. Nicholas will show you all of that in a minute. But I should just let him get on with it. It also reports reports how you're advancing through the different growth stages, how much money you're spending as you advance through the season, and for your livestock. And you have to hand feed the livestock if the season is poor. You have to hand feed them for longer. You can't just quit sheep easily. And, all of these things is done. It tracks your equity and your cash flow and your debt. So it runs underneath all of this full financial books, your financial statements. And Michael can talk about this in detail. And we've actually based the financial books based on Michael's a book, which is Farming the Business. And so, it's social learning. It's a safe space. You can cuck things up if you want and still talk about it without feeling ashamed of what's happened. It reduces the real life anxiety of disclosing your own farm data and stuff like that. And yes, you can fail, but it doesn't matter. You're still learning. And it avoids costly mistakes in real world operations. It teaches you a few lessons about how seasons can go looking really good up to growth stage 25 or 31 and then turn sour, or they can go, and then you learn to make probabilistic decisions. That's the important thing. But it doesn't bother you about having to make lots of what would you call calculations. There's no calculation to be made by hand or on a computer for you. And this facilitator is there to help and identify the teachable moments for the group. Why are we experiencing this? Why are we all doing this and that? And there's no expertise required, and you just got to be challenged, and so on and so forth. And the time commitment can be from 3 hours to 6 hours. You can play it over two. At universities, we've played it over several weeks, so they can do many seasons and really see the effect of salinity, because salinity is a very slow death for paddocks. And so it lets you see the big picture. And I'll let Nicholas now take over and show you the real game itself.
Or silent.
All right, while we're waiting for Nicholas to transfer over. Is Nicholas in the same room as you, Amir?
I think we've lost.
Sorry, I was saying that if we let Nicholas go first, please, and then, sorry, not Nicholas, Michael go next, then we can, Nicholas can log on and I can log off. So he can show his screen.
Sounds good. All right, we'll hand over to you then, Mike.
Okay, guys, sorry, I haven't got any flash overheads to show you, but I thought I'd just talk you through how I use it, which has been, I think, a bit different than Amir, but I just wanted to really thank Amir and now Nicholas for what they've put together. To me, it's a simulation of doing a farm, and it's the closest thing I've found to allow participants to experience making decisions with uncertainty and knowing the economic outcome of that at the end of each season without giving them $10 million to go farming. It's evolved quite a bit over the years. Nicholas is going to show us a web-based version, which it's in development at the moment. I've always used the Excel-based version, which was written in Visual Basic and resides on a hard drive that you play it off your computer. So for me, what is risky business? Basically, it's a mixed farm in WA. I play it 5 seasons, so it takes about a half to 3/4 of a day workshop with participants. And the beauty of it is that it starts to bring out the risks that are involved in farming. The participants start with the same farm, so it's almost like pure benchmarking, because the movement of that farm business from one season to the next financially is really as a result of the decisions they've made as they're setting their farming year up. And they've got to focus on input levels, on rotation selections, and so the ramifications of continuous cereals versus having legumes and pasture in it, a mixture of cropping and livestock, and also whether they want to participate in grain marketing and forward selling. So they're thrown into an environment to make decisions like that. Now, I know Amir said that you didn't have to know any economic prior knowledge. I think it does. In fact, that's one of the benefits of the game, is that participants are introduced to gross margins. They're introduced to profit and loss. And so we know what profits we're making each year, and they're introduced to balance sheets. So normally I'll outline the principles of what those budgets mean and why we use them before we start playing the game. But the beauty of the game is you're not frustrated. You don't have to do the calculations. It does the calculations according to the decisions you've made and put in place. Who have I run it for? I've run it for predominantly groups of farmers in just about every state of Australia. I've run it for rural councillors. I've run it for bankers, and I've run it for university students and also agronomists. Each group tends to take their own learnings away from the farming game, because the game is quite dynamic, and people can walk away. And so agronomists would know the impact now of some of their decisions about input levels, and they'll learn that the highest input level won't give you the highest profitability. Those sort of principles come out quite soundly in the game. I view my role in running a workshop as the facilitator. So I introduce people to the principles of good economics and budgeting. Then I introduce them to the game and get them to understand how to operate the game and how to read some of the numbers and the data, and then make the decisions. And then how the game is played: you start with the season, you're given a weather forecast, you're given a market price forecast, you debate whether that's going to be reality or not. It's only a forecast, and people need to understand that's all it is, but that's the best they've got to make decisions with. You're given historic data to know what range of commodity prices you might experience, what range of production variations you'll experience. So you have this quagmire of data and you're making decisions. I like to put a bit of time pressure in it, not the first season, but after that, because that's really emulating what farmers have to deal with out in the field. You know, I've got a window of opportunity of 2 weeks to put this crop in. If I've got a major breakdown, that's stressful, but I've got to work to that time activity. So I'll facilitate that within the group, and then I'll stop after each year, and I'll have a series of butcher's papers up on the walls with the groups writing out the result of the profits they had that year, or the profit they generated, and the result of their net worth, because the winner has the highest net worth after 5 years. So it really encourages the competitive nature of the game. And then we can sit back and we can unpack some of the decisions they're making. And then we can go to the leaders and say, okay, you're winning the race at the moment. What do you think has made your difference of the decisions as opposed to your neighbours? A lot of people don't know, because we don't have time to really analyse the differences, but it does elicit a lot of discussion and a lot of debate. And if you're in a highly competitive environment, which I did run one last year with a group of highly performance farmers, they didn't want to share their strategies between them because they wanted to win the game. So I found it really hard to get any discussion out of them. So I see my role as a facilitator, and I'll facilitate things I observe in the group. So and I generally play the game where a farming family is represented by a computer, and there's 2 to 3 people at that computer. So if those 2 to 3 people aren't getting on and making decisions collaboratively, I'll pull that out and say that's no different to farming, because we've got dad being a dictator and the son's got to do everything dad wants to do. And so I unpack management styles out of it, or I'll unpack is it better that we be more risk-taking in our decision-making or less risk-taking? So there's a whole raft of things I'll unpack as I facilitate it. The outcomes, the learning outcomes are quite diverse and can be quite consistent from group to group, but really people take away elements of the farming system that they don't understand and they're experiencing in the game, then take away, and I encourage them to take it back home if they're farmers, or back to their advisory practices to emulate with the farmer clients they're dealing with, or university students to understand the real dynamics of how gross margins interact with profit and loss, and how profit and loss interacts with balance sheets, and what the importance of all that sort of stuff is. So I sort of was going to outline that, and you guys then can come back and ask Amir and Nicholas and myself questions on it. One interesting observation I had, and I don't know how, and it's interesting, Amir's using it as a research tool now, in that the first game I was using out of WA was based at Merredin, which was a low rainfall farm in WA. And the only consistent thing I could pull out of it is that the groups that would win at the end of the 5 seasons weren't the groups that were the big risk takers. They were the conservative ones. They never put on more than average input. They never went to full input levels. They were the ones that would always keep sheep in the system and wouldn't go continuous cropping. So the only conclusion I got out of that is that low rainfall really does reward conservative decision making. Now, I can't say that of the game at the moment. As Amir said, it's now Katanning, which is a higher rainfall area, and so the results of that type of risk-taking strategy might be very different. But I guess for what it's worth, when you run it with 80 farmer groups and you're seeing that pattern coming out, that's an observation from a research perspective. But anyway, having said that, you might be interested. Amir, I've got 4 groups that want to run risky business over the next 2 months. So in South Australia, farming groups, really. So I'll just stop there.
That sounds excellent. Thanks, Mike.
And perhaps
have you joined it?
Nicholas can take off, and then we can just answer questions.
Thanks, Mike. I thought you were about to give us insider trading on how to win the game, and we're all going to go and win in our workshops when we ran them. But then you put the asterisk on the end, which was
look, Nicholas, I'd never do that. That's the heart of a facilitator. Never give it away.
All right, so over to Nicholas, and we can see up on the screen. We can see that. So over to you guys.
Okay, you can hear me well.
Yeah, we can. Thanks.
Excellent. Thanks, Mike, and thanks, Amir. So
now we can't hear you. Nicholas, if you can hear me, we can't hear you.
Yeah, he's got to turn on his microphone. Just hold on a moment. Oh yeah, use this.
That's fine. So yeah, in the past it was not overly accessible with it being tied to an Excel spreadsheet. So we've now made it available online, which just makes it a lot easier. So I've taken it to just a group of students last week, and they were able to pull out their laptops and just join immediately. So in many ways, it does look similar to the previous software. We've got our management zone on the left, so that's our 9 different zones with our 3 different soils. So we have 3 lighter soils, our 3 kind of gravelly, loamy soils, and then our 3 heavier soils. And so we've still got this kind of weather forecast on the right. And so we've had a previous year where we grew some lupins in this paddock. So we had a great year. So we've got 90 units of nitrogen fixed, and we've got a good year ahead of us. So this is the kind of stage at which we begin to make planting and allocated decisions for our nitrogen and for our crop protection. And so everything updates live in the game, so you can kind of ask any question of the model and begin to interact with it. So we've got a slider at the top, and that allows you to pull this little dot down on the right of your screen. And so you can say, if I have like the best year ever because we've started so well, what is that going to look like? And I might just have to, there we go. So you can slide your kind of prediction up and you'll see your yields go up even higher on that top right card. And you've got a gross margin below it of $1 million for that zone. But then like this year, you might ask yourself, well, input costs are going to be really high. So it kind of defaults to kind of median or average input costs, but you can bring those right up and say, what if your nitrogen and your diesel doubles? Well, that has a significant hit on our gross margin. We've lost about 25%. And so you can then go through over here, you've got all your different views and you can begin to make a decision about what you want to do on this paddock. So starting well, you might want to load it up on starting nitrogen and maximize the rain, or maybe you want to hedge and you say, well, it started well, but the position you're in, you don't need to make a bunch of money. And so you can begin to play with your inputs, both your nitrogen up the top and your crop protection down the bottom, and kind of make decisions looking forward. Now, one of the great things about the tool I found is it allows us to put kind of any question in the context of a farm business. And I suppose this is why Mike has found even the old version valuable, because many people have many questions, and obviously at the moment nitrogen is a big one, but there's no reason why we couldn't develop this more and say put in something like liming an acidic soil, because the software has gross margins that update, so you're expecting fantastic yield. But if you slide that down to a kind of a more average season this year, all of that will update and your metrics will kind of flow through your business. And you can look at your prices and you can consider kind of all of the interacting factors. But yeah, I guess, you know, as economists, we're not just thinking about the yield, we're also thinking about how does it wash through. So once you're happy with what you've set up, you can go to the next stage. And we've put in a lot of effort to kind of give feedback to the player constantly. So it'll kind of show you where are you spending your money between seeding and the first checkpoint. And so you can just see, this is just a great point. If you have a large farm business, just at seeding, you can spend, you know, close to $1 million on nitrogen. And so depending on what your target audience is, that can be a very key message. Just something kind of as simple as that. And so you might say, well, you know, I'm risking a lot here. Maybe I want to pull back on my nitrogen, and I'll just quickly kind of open all my paddocks and I'll say, I was never prepared to spend $1 million. So I'll pull back on my paddocks and I'll just put on kind of a starting 30 units of nitrogen. And that feedback will then be given to the player. So we've reduced our input costs. It's now gone from 900,000 to 650,000. Maybe that's something I'm more comfortable with. You know, maybe to begin with, you've seen your forecast and it's pretty high, but we know that can change. So you'll progress now.
Explain the dots on the left-hand chart.
Sure. I'll do that now. And so now the rainfall has progressed and it's still looking like a good year. And so we've got this chart here on the left, which is really useful because it pulls in the current rainfall data and the current nitrogen inputs for the paddock that you've selected. So I can click on my wheat and we're expecting a huge year. And so you've got a blue line for your current nitrogen inputs, and then you've got a gold line, which is the economic optimum for the current rainfall expectation. So if you were expecting the year to progress well and you had risk appetite, you could on this paddock say, let's increase my units from 120 to about 160. So we can begin to say, now I'm going to put on 100 units kind of in my next stage of decision. So we would have increased our gross margin here on the left. It's sitting at 776, whereas before it was sitting at 720. So you can begin to decide, do I want to put on that extra cost? So it's going, we've got a cost, that red box on the left, 502 to 580. Do I want to spend that extra $80,000 to get that extra, what was it, 20,000 in return. And so you can begin to model these things in a defensible way. And the nice thing is,
Flipped the chart up.
Is the season always progresses. And you can begin to say, all right, we're happy with our decision. Things have gone well. We then have another chart sitting behind this, which you might be familiar with. And this has a kind of a distribution. So we'll just leave it on yield. And so this is showing us for our range of expected rainfall from our kind of decile 9 from now and our decile 1 from now, we can expect yields very high from the chart's telling us from kind of 7 to 9 tons, but that's because this chart doesn't actually use the same metrics as that of the card. And I can explain that. We have a little disclaimer here. So this paddock is affected by things like disease, rotation penalties, and waterlogging, and that's not shown in this kind of optimistic chart. So again, we've got our crop protection, which we didn't do at the start. So perhaps we've lost yield that we could have had. So we can say crop protection from here on, what will that do? That'll lift our yields from 5.5 to 5.9, and we can begin to realize our yield potential. But the nice thing about risky business is we're always thinking about our gross margins and begin to think, what effect does that have on our gross margins?
Can you go back to flip the chart again for a minute? Because this probability chart here helps people see that, not got a good gross margin. People can see that they can this season for that paddock, there's a range of outcomes that is possible in terms of gross margins of that paddock. Is it's unlikely that they will lose money because also of what the blue dotted lines are showing about the rainfall to date. Now, if and when they get the 2010 type year that we had in WA, the whole thing will look very, very different, and they will see a distribution move to the left of where they might be making losses if they apply any more nitrogen, or in fact, they will just make losses even if they do nothing other than just grow wheat. And so the gross margin at the bottom will show them that they can either lose a lot of money or make a little bit of money, depending on how the weather will turn out after the growth stage 25, after the purple line and blue line, pan out to the end of the season. So the green lines, the on the right-hand side curve or chart, are the historical averages, just like you see in rainfall to date charts of this department. But the purple line is where the season is at now, and when did we sow the crop. And then when you arrive at that decision point of 1st of August, it also then does projections based on those historical averages and say, well, we've had so much rain that even if we get the worst possible outcome, it's actually going to be more than our normal decile 5 year. And if we get the best outcome, of course, then it'll be like the best historical season. So the blue dotted lines show that things narrow, the probabilities of outcomes narrow from a wider range to a narrower range. So this is a very useful thing, but we've always had these charts for the last 10 years, but we haven't been able to speak about the money that people could make under alternative scenarios that could pan out. So this tool actually helps us connect all of that together coherently into one integrated package. So if you go back, then what you're seeing in the bell-shaped curve is the outcomes associated with that, the various ranges of the dotted blue lines, if the seasons finish the way that the dotted blue lines show.
So I might just jump to another paddock, which shows just another scenario. So which is our barley paddock, and on this paddock we've had barley previously. So we've done barley on barley, and we haven't put on anywhere near as much nitrogen, 50 units. So this is just an interesting side-by-side comparison, these top two right paddocks. We've had one paddock where we've had a disease break and a weed break with our wheat and canola. We've kind of optimized our nitrogen decisions. And it's not just our production kind of going from both cereals, one is 6 tons, one is 2 tons, but we've also optimized our inputs. And there we're kind of reaping the reward for our gross margin between 200 and 800,000.
And here people can also see, when they see the orange line, they can see the gross margin. When they see the green line, they can see their agronomic line, that is their yield. So many farmers, you know, they send their soil test to the analysts, and it comes back and says, oh, you know, what is your target yield? And the farmer says, my target yield is 3 tons, 4 tons for a particular paddock. But it's never really clear, even from the surveys that have been done by GRDC, as to how farmers set those target yields. And this one can begin to describe, well, do you want an agronomic target yield, or do you want an economic target yield, where you are making as much money as possible, you're working for yourself and not for the fertilizer company, and giving away your profits? Because what maximizes your profit, the amount of nitrogen that will maximize your profit, is not the amount of nitrogen that will give you, say, 90% of your top yield. And so that is really important. And then if you could please show us the nitrogen, say the emissions.
Sure. Just before that, so just demonstrating Amir's point, we have a chart here, and this gold line is our optimum economic nitrogen input. So it's just above 80 units. And that's when your input costs are very high. So just kind of considering both the agronomics and the economics together. Whereas if you had kind of cheaper to average input costs, then of course your inputs favor going closer, but not all the way to your kind of agronomic optimum. So we'll put on our emissions now as well.
Yep. So, and this one shows an inverse relationship, opposite relationship between maximizing your profit or maximizing your yield with nitrogen and your emissions. So can you see the purple line starts turning and going at a faster rate the more nitrogen you apply, because you're reaching the plateau of your yield or your gross margin, and after which you will get a 5-ton crop, but at a much higher level at a rising level of greenhouse gas emissions, because basically it's unlikely that you will use all that nitrogen and it will become emissions. And many farmers do this just in case type of, what if it rains? What if I want to look after my crop, and in case it rains, I want to add as much nitrogen as I can in case it rains. But here you can play with the slider up the top and say, well, if it rains up to decile 9, your water is the main limiting factor, and not so much your nitrogen. So it shows you what your emissions are and where your profit lines are, and so on. And then what we can do is we're going to also offer incentives for farmers to reduce emissions by, we will say, we are going to offer you another $50 a ton if you produce low emission wheat, and we will set the standard of that emission. We will say it needs to be less than 900 kilos per ton of or something, 500 kilos per ton of grain. And so then they can choose whether they want to optimize their nitrogen for profit without the premium, or do it with the premium for greenhouse gas emissions. So we're going to do that just to see what farmers or players will do, because it'll be a nice social experiment or economic experiment.
Sorry to interrupt Amir and Nicholas. Maybe if we aim for 2 or 3 more minutes, this is going really well, but just so we can have some discussion at the end as well, that'd be great.
Sure. I'll just add one more thing. It was kind of my little my little pet project in converting risky business. I'm really passionate about kind of modeling kind of the logistics of a farm business that wasn't originally in risky business. So currently, farmers kind of have unlimited access to nitrogen. They don't have to buy it and wait for it to be delivered. And it used to be just like that for your storage of grain. So now, when you kind of complete the year, and I've just sold all my crop, but your grain actually goes to storage, and you can, as a player, decide when are you going to sell that. So you can sell it all at harvest, or you can wait for the price to improve. And sometimes you get to a stage in the game where you need some money, you don't have any money in the bank, and you can decide, do you want to take out a loan, or is the price good for the product that you've harvested, and do you want to sell it now? So that's where I see kind of a lot of potential use of something like this software, is you can begin to start modeling those more realistic questions, not just kind of in a spreadsheet you assume you've got a perfect world, but you've got uncertainties even in things like grain storage, or nitrogen and storage of nitrogen, and the cost of those things as well.
Have we done forward contracting?
Yes, sir.
And also, to manage the price risk of commodities, you can forward contract the grain. So that's another option that we offer the player. What's really nice is, unlike in real life, you get to actually see what your budgeted gross margins were and your actual gross margins were, and then how did you arrive? How was it that you got those gross margins? My conversations with many advisors and farmers indicate that it is very hard for them to come back and say, you know, should we have put that much nitrogen in? What was really our gross margin? Because, you know, afterwards you're busy planning the next year, and you send your books to the accountant, and 12 months later, 18 months later, you're doing your tax. And perhaps Mike can speak to this, that gross margin can, how profitable was each thing I did on each paddock, each land use, is actually an elusive thing for many farmers. It's difficult for them to go back and calculate all of that. And farm advisors, in my experience, don't provide that service where you go back and really analyze everything in that sort of level of detail, subject to the uncertainty they had.
Can you model a starting conditions where you have different levels of debt?
Yes.
So
we can start them at different levels of debt.
You do that, and do you split out variable costs versus the fixed costs?
We do, yes. Yeah. We have depreciation of assets. There's a full financial statement underneath the books.
Yeah. And you can play around with those conditions.
Yeah, we set them, and then the player has to then manage it. So we start, we grandfather it to the player, and then the player can then. We try and start everyone the same, but we don't have to. But we start everyone the same, and the decisions they make changes their net worth and how much grain they grow, how much sheep they grow. Suddenly they start diverging from each other. In the old days, Mike, by the end of the game, we used to have $1 million difference in net worth between players. I don't know what your experience was.
No, it was, but each player starts with the same debt, the same size farm, the same costs, the same everything, so that the winner is purely done on skill of decision making, really.
And that way we can compare them.
Yeah, Amir has, and sorry, Nicholas, this cloud-based activity has given the game a lot more dynamics. I have seen more dynamics added. Nicholas showed me 2 months ago or 6 weeks ago, and there was a lot there. The challenge I have in running the game is just to keep it simple enough so we're not spending all day just understanding how to tweak everything, but to focus on those major decisions of inputs and given commodity prices and things like that. So I don't use things like emissions or trees or salinity in the games that I run, because it's either not relevant, or I don't want to spend too much time focusing on the dynamics of the game. I want to spend more time on looking at the outcomes of decision making.
That's potentially a good segue, because we talk a lot about the complexity versus usability debate around a lot of these things as well. And we've got about 10 minutes left, and I feel like there's going to be two sets of questions. There's going to be the really technical, how does the tool work questions? And some of those are already in the chat there, and I'm sure others have some. But the other side of it is towards groups, is this something that you might want to use? Do you see interest in logistical questions around as well? But yeah, aware that we only have 10 minutes left. Maybe we park some of or Lindsay, do you want to pick one of your technical ones, and then we'll go from there?
I'll do one, Brendan, and I think it's so, guys, in RiskWi, one of the key elements we're trying to understand is the legacy impacts of nitrogen decision making. So understand that through time and over years. And so one of the questions I have about how does risky business handle legacy of nitrogen in the prior year? So if you'd over fertilized the prior year, obviously you've mitigated that's gross margin, but how much is then carried forward to the next crop, or are you just assuming it all just disappears? That's one technical question because it's relevant to what we're doing in RiskWi across the program.
We can change things to reflect the reality of the environment that, say, Mike is in and you're in. But in WA, we have what technically we call shit soils or rubbish soils, and they're highly eroded. They're basically sand or a little bit of loam and sand over gravel, that sort of stuff. If you don't use the nitrogen, you tend to lose it. And only some loams hold on to the soil, and we don't have a lot of those loams and loamy clays. And so we can adjust those parameters. It's not a problem, and then let you bring in the science of what was observed in the eastern states versus what we have here.
Louise Barton's work at EWA is pretty interesting with the nitrogen tracing in terms of trying to quantify that, but it's just not a big enough data set to cover all the soil types.
Yeah, but we have presently said that you keep your legume nitrogen, but you don't keep your fertilizer nitrogen. But it doesn't mean we can't have a pool of nitrogen that we can carry forward. We certainly have phosphate and other things that we have a pool for. We assume that they remain reasonably, they have a longevity beyond one season. And
there'd be a lot of nuance around the nitrogen as well, in terms of, are you banding the nitrogen? Are you applying it as a urea? So if you're banding the nitrogen as a UAN, for example, it's going to be a lot more efficient, but it's also prone to leaching. So it depends on those seasonal conditions. Or if you're applying it as a urea granule, then you're going to get a lot of potentially volatilization at different periods as well. So there's nuance in there that would be hard to model.
What I think the game would do is it would facilitate discussion, and it will raise the discussion into the sphere of research. And you would say, well, funny you should mention that. Lindsay Bell has done some research in this area, or Louise Barton, and let's have another session where
inhibitors or leaching inhibitors.
Let's go and have a look at the technicalities of these things. The game is not meant to model those sort of things in detail. It's certainly not APSIM. It's not, but it uses the yield of APSIM based on the season that you're experiencing.
Is it waterlogged? Do you get waterlogged?
Yes, things get waterlogged. Things get acid. You lose yield to salt. Malt salinity, as the water table rises.
Amelioration, like spading, deep ripping.
We do deep ripping, yeah. We have deep ripping and therefore lime costs. Yes. Yeah. Everything's in there.
Great. I often feel like the NPL dominate these discussions, so I wanted to open the door to groups. Did anyone from any of the groups have questions? I mean, particularly. Like Mike has been doing this with growers. I know Amir and Nicholas have been implementing this in WA, but Mike also outside of WA as well. So did groups have any questions? If not, I can go back to the NPL, but I've got a quick one while we still then. Mike, you've been implementing this outside of WA, but obviously with a WA model farm, have you found that doing it outside of WA, it still works? Do you have to adapt somehow, or?
Look, the principle's still the same. I do, when I start the game, I say, look, farmers, I've taken you out of your district. Your district knowledge isn't as accurate as it needs to be. It's like you've bought a farm 100 kilometres away and you've got to learn from scratch. They accept that, and they all are coming to the table with the same knowledge. But also, look, I'm not just looking at technical stuff. For example, in the original game, people could go broke. And so if they went broke, I'd put it to the rest of the community. Do we give these guys grants to keep farming, or do you want to buy their farm off them? And some really interesting debates. So you don't just focus on the technical, you focus on perhaps the political, as well as the dynamics of management. And all of those add to the risk profile of a farming business, not just how much nitrogen we put on.
Yeah, I think that's a nice frame. I'm not sure how much I'm meant to give away, but I heard rumours there might be some scenarios that involve, weddings that need to be funded or other things that sort of come into that non-agronomic side as well. So, yeah, I think there's the dual pitches there as well.
The farm, your hay shed can burn, your youth does collapse and die, your daughter does get married. Yeah, we do all of that, and they all cost money, and you have to find them.
Succession planning.
Yeah. Well, that's your net worth.
The lawyers get all of the equity, and the farmer that.
No, we don't have a divorce. We don't have it.
Look, you should probably have a divorce, because that's quite a real risk.
Depends if you're using trusts and how well you set them up.
No, I do not want to go there. Thank you. It's hard enough as it is.
There was no group questions, so then we defer back to NPL for the last bit. If there are open room for anybody that has any questions. Peter, I think you had your.
Sorry, I keep jumping in, and everyone else is using their chats. Future scenario, so climate's getting hotter, drier, less growing season rainfall. At the moment, you're bringing in historical data. Have you tried looking at modelling future data?
Yes, so we have variables in there where we can start whittling the historical stuff to mimic the future stuff. So we can whittle the rain away, and according to what we can put in the algorithm that says people are expecting less rainfall in August and more in summer or something like that, and the climatologists, and we can start putting those adjustments in. And of course there will always be these wild fluctuations, and one of the things that the game shows you is that seeing the signal for the noise is really hard. So there's a lot of noise in markets and weather, and there's lots of variation. And exactly where is the climate change in there? How do you see the climate change even after you've played it for 10 years? Have we had climate change or not? Because, how do you know you've had climate change? Because you're just going through the roller coaster of different seasons. And then we can have a discussion about that and say, well, you don't just listen to Trump, whether there was climate change or not. You need to listen to scientists, and they're the ones who go and analyze things. And that goes beyond the thing of this, scope of this project. But we have already put it in. So you are experiencing climate change, but you don't know it.
Yeah. I mean, it'd be things like cyclones that come further down, and you have more intense summer storms.
Exactly. All of those.
Like you wash your topsoil away, you have more fires, you have hotter conditions that lead to lower lambing rates, those kind of things, because the joining temperatures are too high.
That is true, but again, that's beyond the scope of this one, because this deals with mostly variability.
We'll sneak in one quick question here from Rick, who's got his hand up.
It's come a long way since running it with UWA students there, Amir. Looks fantastic. I like the way you can flick between different ways of representing the risk. And it's a question for Mike as well. What have you learnt about the most effective way to display those uncertain outcomes, or the range of outcomes?
I think Nicholas and Amir have really made big advancements in having those gross margin frontiers and production frontiers. The old system didn't have that, so we could just debrief that in discussions without actually showing people. But now you can actually show the relationships on the screen. I think that'll really enhance that understanding.
Yeah, thanks, Rick. It's something that we definitely are still kind of grappling with, and probably the one thing that I've spent the most time on in the new version of Risky Business is just trying to kind of defensively model your nitrogen response curve from 0 to 200 at every rainfall level, and that's, you know, good luck kind of thing. It's tricky, but then not only that, because obviously you've got then a 3D curve from your nitrogen, your rain, but then overlaying the gross margin on top of that. It's tricky, and it's hard to kind of put that in a single picture. But yeah, work in progress. Risky Business definitely helps to kind of simplify that as much as we can.
Excellent. Well, we've gone over time, so I'll save a big wrap up and just say that thank you to Mike, Nicholas, and Amir for presenting us around Risky Business. We don't have a formal arrangement with Risky Business, but if groups are interested in exploring this more, then certainly it can be a part of RiskWi. First point of call is probably to those three to see what you'd envisage and what it might look like, and then have us in as part of that conversation, and we can see what that looks like. But I will leave my wrap up there. Thank you, everybody, and hopefully see you for the next one of these as well.
Thanks, everyone.
Thanks, Brendan.
See you later, team.